Hello again and welcome to my video on some insurance exam tips. I am Rebecca, your insurance lady, and in this video we're going to review a practice question. I'll go over the question, I'll go over the answer, and then we will spend the majority of the time going over a personal articles floater. So let's begin. So question. All of the following are true about a personal articles floater except A, coverage is all risk, B, most are ACV, actual cash value, C, appraisals are usually required, or D, coverage is provided on a blanket basis. Before you answer this question, make sure that you understand it. It's saying that all of the following are true, meaning 3 of these are correct, and there's one that's incorrect. And the one that's incorrect is the one that you are going to select for the correct answer, not to confuse you. So just take a few moments to review and remember to pause it now if you need more time. All right, so I'm gonna give you the answer in 5, 4, 3, 2. The answer is D. The part that is incorrect is that coverage is provided on a blanket basement. Coverage is not provided on a blanket basement with a personal articles floater. A blanket coverage is when you can insure a bunch of the same items with the same exact coverage. With a personal articles floater, coverage has to be scheduled or listed per item, and there is usually an appraisal requirement. So personal articles floaters insures personal articles or personal property. This floater can be added as an endorsement on a homeowner's policy, or it can be purchased separately. A personal articles floater allows the insured to list certain types of property that they want to be covered. For example, an insured may have jewelry, watches, furs. Those all can be insured on a personal articles floater. So for those of you who have a basic understanding of what's covered in a typical home policy, you should know that personal property is covered under coverage C. Personal properties are the insured's personal items in the home, such as watches, jewelry, furniture, a PlayStation, their personal things or their personal belongings, right? So why then, if coverage C covers 50% of the replacement cost for their personal items, why would an insured need to schedule a personal articles floater? Great question. Here's why. So under coverage C, items are covered up to 50% of the dwelling's replacement cost, which means that if the replacement cost is $200,000, then coverage C would be covered up to $100,000. But there is a stipulation to this coverage when it comes to insuring certain types of property called special limits of liability. So we'll go over some of the special limits, but if the value of the item is worth more than 50% of the replacement cost value, then you know the customer is going to need a personal articles floater. So special limits of liability. This is an amendment in a homeowner's policy. It indicates the maximum amount of coverage that would be paid out for certain targeted items. You have money, gold, and coins, is saying that the maximum amount paid out for loss of these items would be up to $200. You have watercraft and trailers, theft of jewelry, watches, furs, precious stones, semi-precious stones, or portable electronic devices. The maximum amount would be paid that would be paid out for these items would be $1,500. Keep keep in mind that it's for theft of jewelry, watches, furs, precious stones, or semi-precious stones. It's not for theft of watercraft and trailers. It's not for theft of portable electronic devices. It's for theft of jewelry. Also for firearms, silverware, it's for theft of firearm or silverware. So if you have a homeowner's policy and you suffer a loss due to a covered peril, meaning a peril that's covered in your policy, such as fire, and you had a coin collection worth $8,000 that was damaged, coverage C would not pay the full amount. Based on the special limits of liability amendment, they would only pay up to $200. Here's another. If in that fire, your jewelry worth $10,000, let's say you have a wedding ring worth $10,000, was damaged based on the special limits of liability, you would still be covered up to that $100,000, the 50% of replacement cost coverage, because the peril was fire and not theft. However, if the jewelry was stolen from your home, that then is the peril of theft. Then you would only receive up to $1,500 for your $10,000 item. And this is when you need to schedule a personal articles floater endorsement on this piece of jewelry. The personal articles floater is an endorsement that will increase the premium when added because you're adding extra coverage to the policy. The good thing about a personal articles floater is that it is an all risk policy, meaning open perils. This means everything's covered other than what's excluded. It will also typically pay out at an actual cash value, and the scheduled or listed items will usually need to be appraised. Some other important facts about a personal articles floater is that it's known as an inland marine insurance. This means that it is insured no matter where it is located. It's a floater. So that means that the property is designed to be covered at the same value no matter where it floats, if that makes any sense. So if you are on vacation in Europe and your Rolex is stolen, if you have a personal articles floater endorsement, your property is covered. Many floaters also cover loss of items, where typical home policies do not cover loss of items. So if an insured has a current personal articles floater and purchases a new item, this new item is going to be automatically covered under their personal articles floater endorsement. The general coverage amount, depending on what the value of the item is, would be up to $10,000 or 25% of the amount of insurance already scheduled, whichever is less. For example, if you have a wedding ring scheduled for $10,000 and you just purchased a new tennis bracelet that's worth $10,000, the automatic coverage for the bracelet would be $2,500 until reported to the insurance company for coverage. The insured has up to 30 days to report the newly acquired item to the insurer. After 30 days, if not reported, it will no longer be covered under the personal articles floater. Why is it covered only 2,500 instead of 10,000? Is because that's 25% of what the current coverage is, which is 10,000 on the wedding ring. So it's not going to insure more than 25% of the current coverage. All right, so that's it for personal articles floater. I do want to thank you for viewing this video. I hope it helped you. Remember to hit like, if you like, subscribe because I do have more videos to come. I also have a couple of longer videos on my webpage. So if you like my teaching style, please support my page. For those of you out there looking for some affordable study material, I'm partnered with Kaplan Financial Education. Use the link below and get a discount on any of their products. They have full-on courses that will help you pass your exam. There's also a test bank with lots of relevant questions. They also have study materials, books that you can buy. Just click on the link, select your state, and then review the products. I do want to thank you again for watching. I am Rebecca, and I am your insurance lady.